Good morning, everyone, and welcome to the market opening bell on Thursday, April 16th, your 10-minute guide to the stock market. US President Trump stated during a media interview that the conflict with Iran has ended. This boosted sentiment across Asia-Pacific stock markets, and Hong Kong stocks rose as well. The Hang Seng Index opened 295 points higher, climbed as much as 344 points to a high of 26,216, and closed up 75 points or 0.3% at 25,947. The H-share index rose 46 points or 0.5% to close at 8,718. The Hang Seng Tech Index gained 59 points or 1.2% to close at 4,911. Total market turnover for the day was 245.5 billion Hong Kong dollars. Southbound Stock Connect funds recorded a net inflow of 4.221 billion dollars into Hong Kong stocks. Among them, net buying included Pop Mart totaling 775 million, SMIC 693 million, Ecoso 165 million, and SMIC 114 million. Net selling included Alibaba totaling 679 million, Geely Automobile 566 million, Yangtze Optical Fiber and Cable 559 million, and Tencent 391 million. According to statistics, Southbound funds have been net buyers of SMIC for 7 consecutive days, totaling $1.36 billion. They have also been net buyers of SMIC for 4 consecutive days, totaling $952 million. On the selling side, they have net sold Yangtze Optical Fiber and Cable for 4 consecutive days, totaling $1.337 billion, and Tencent for 3 consecutive days, totaling $2.451 billion, as well as Alibaba for 3 consecutive days, totaling $1.224 billion. The Hang Seng Index briefly rose above 26,000 points yesterday, also breaking above both the 50-day and 100-day moving averages. However, it failed to hold above these levels. It is currently at a critical stage, challenging the important resistance level at 26,300 points. As long as it does not fall below 25,500 points, the index still expected to challenge the 26,300 point resistance again after completing its consolidation and digestion phase. On the mainland, the 3 major A-share indexes opened higher. The Chinex index once hit its highest level in nearly 11 years, since June 19, 2015, before profit-taking caused a noticeable pullback. Both the Shenzhen Component Index and Chinex ended in the red. The Shanghai Composite Index held steady above 4,000 points, closing at 4,027, virtually flat with a gain of less than 1 point. The Shenzhen Component Index closed at 14,498, down 141 points or 1%. The Chinex Index closed at 3,514, down 43 points or 1.2%. Total turnover in Shanghai and Shenzhen combined reached 2.42 trillion yuan. The onshore renminbi exchange rate against the US dollar was set at 6.8582 in the daily midpoint fixing, up 11 pips from the previous day and marking the highest level since March 24, 2023. Innovative drug concept stocks in the Hong Kong market rose collectively. On the news front, the General Office of the State Council issued several opinions on improving the drug price formation mechanism the day before yesterday. The document states that for high-level innovative drugs with high innovation and significant clinical value, pricing that matches their high investment and high risk should be allowed in the early stages after launch, and prices should remain relatively stable for a certain period. Analysts believe this is the most important guiding document on drug pricing issued by the central government since 2015. It's seen as a strong signal that the government is clearly committed to supporting globally competitive domestic pharmaceutical and biopharmaceutical companies. The policy aims to let the market play a more decisive role in drug price formation, with leading innovative drug firms and biopharmaceutical companies expected to be the main beneficiaries. It is also worth noting that the Ministry of Industry and Information Technology has stated it is preparing the 15 five-year plan for the pharmaceutical industry. The plan aims to accelerate the development of innovative medicine, support innovative drugs to enter production, reach the market, and enter hospitals as soon as possible so that patients, especially the general public, can access new drugs with more reasonable pricing and be able to purchase them conveniently near home. Technology stocks generally rose. Alibaba Cloud announced price increases of 2 to 7% on several DDoS protection products starting from mid-July, with the affected products mainly related to its large model service platform, Bailian. The Quen AI glasses S1 officially went on sale, helping Alibaba rise 3.3%. Kuaishou gained 2.2% at the 13th China Network Audiovisual Conference. Kuaishou's Senior Vice President Ma Hongbin revealed that Kuaishou's Clean AI has been deeply integrated into professional film and television production workflows. In the TV drama Taiping Lian, Clean AI was used to create some virtual scenes, shortening a traditional 2 month task to within 2 weeks. Industry sources indicate that in the highly popular microdrama sector, production costs can be reduced to at least one-third of traditional levels, with the production cycle shortened by more than 60%. Clean AI is moving from being able to generate to being able to deliver, shifting the industry from a competition for resources to a competition for imagination. According to preliminary data from IDC's latest global quarterly mobile phone tracker, global smartphone shipments in the first quarter of 2026 fell 4.1% year-on-year to 289.7 million units, breaking the streak of 10 consecutive quarters of growth since mid-2023. The slowdown in the first quarter is expected to be a mild signal for the full-year trend, as supply tightness and rising prices for memory chips may further dampen market growth. Samsung reclaimed the top spot globally with its Galaxy S26 Ultra, shipping 62.8 million units for a 3.6% year-on-year increase. Apple ranked second with strong performance from the iPhone 17 series, shipping 61.1 million units, up 3.3% year-on-year. Xiaomi ranked third with 33.8 million units shipped, down 19.1% year-on-year. Oppo and Vivo ranked fourth and fifth, with shipments declining 9.9% and 6.8% respectively. In the mainland China market, first quarter shipments totaled 69 million units, down 3.3% year-on-year. Huawei maintained its number one position with 13.7 million units shipped, up 8.1%, while Apple shipped 13.1 million units, surging 33.3%. ASML, the world's leading semiconductor equipment maker, reported first quarter sales of 8.8 billion euros and profit of 2.8 billion euros. It expects second quarter sales to be between 8.4 billion and 9 billion, slightly below market expectations of 9.07 billion. However, due to surging global AI-related spending, driving semiconductor production and increasing demand for advanced chip manufacturing equipment, ASML raised its full-year sales forecast from 34 to 39 billion euros to 36 to 40 billion euros. The company maintained its gross margin target of 51% to 53%. This revision has already taken into account the potential impact of current export restrictions. CATL released its first quarter results under Chinese accounting standards. It achieved operating revenue of 129.1 billion yuan, up 52.5% year-on-year. driven by sustained growth in its core business. Net profit attributable to shareholders reached 20.738 billion yuan, up 48.5%, far exceeding the expected growth of around 21%. However, it was down approximately 10% from the fourth quarter of 2025, mainly due to seasonal factors. Earnings per share were 4.58 yuan. The company announced its 2025 annual dividend distribution plan, a cash dividend of 69.57 yuan per 10 shares. The record date is April 21st, 2026. CATL's ternary lithium battery market share in the first quarter jumped to 81.6%, showing overwhelming dominance in the high-end pure electric and hybrid vehicle markets. Its overall power battery market share remained at 42.6%, maintaining its position as the global leader. Management stated that order backlogs for both power and energy storage batteries are full, and earlier capacity expansions are taking effect through full utilization, though full utilization will still take time. Current overall capacity utilization is relatively high at around 80 to 90%, and this level is expected to continue into the second quarter. The company also announced the establishment of Times Resource Group with a capital injection of 30 billion yuan to strengthen control over upstream key mineral raw materials and mitigate cost volatility risks. First quarter operating costs rose 51.6% to 97.086 billion yuan. CICC released a profit growth forecast for the first quarter of 2026, expecting net profit attributable to parent company shareholders to range from 3.369 billion yuan to 3.88 billion yuan, representing a 65% to 90% increase compared with the same period last year. The improvement is mainly due to the company capitalizing on the stable and improving capital market conditions and higher trading activity to drive coordinated and balanced growth across its investment banking, wealth management, and other core businesses. SMIC Energy Technology, stock code 6656, the global leader in stackable distributed solar storage integrated systems, will begin trading today. In yesterday's pre-market trading on the Phillip Grey Market, it closed at 578 Hong Kong dollars, which is 78.3% or $253.8 above its listing price. Excluding transaction fees, each lot of 100 shares would yield a paper profit of $25,380. SMIC Energy Technology was founded in May 2022 and officially entered the commercialization stage in 2023, after which it experienced explosive growth. According to Frost & Sullivan data based on 2024 shipment volume, the company held a 28.6% global market share in the stackable distributed solar storage integrated machine segment, ranking first worldwide. Revenue grew from 58.3 million yuan in 2023 to 1.33 billion yuan in 2024 and 9.001 billion yuan in 2025, an increase of over 150 times in 2 years. Net profit turned from a loss of 373 million yuan in 2023 to a profit of 84 million yuan in 2024 and surged further to 2.919 billion yuan in 2025. Hong Kong Exchanges and Clearing CEO Chen Yiting said that the year has started strongly. New share fundraising activities have already reached 40% of last year's full year total, and the number of companies queuing for listing is at a record high. More and more overseas companies have expressed interest in listing in Hong Kong, with over 10 multinational corporations currently in preparation. Reports indicate that the United States and Iran are highly likely to return to Pakistan next week for a second round of peace talks. Both the S&P 500 and Nasdaq hit record highs. The fear gauge VIX index fell 0.2 points or 1% to 18.2. The S&P 500 reached a new 52-week high, touching an intraday peak of 7,026 points and closed near its high at 10,022 points, up 55 points or 0.8%. The Nasdaq also set a new record high, closing near its peak at 24,016 points, up 376 points or 1.6%. The Dow Jones Industrial Average underperformed, falling 72 points or 0.2% to close at 48,463 points. The Nasdaq China Golden Dragon Index, which tracks Chinese stocks listed in the U.S., rose 52 points or 0.8% to close at 7,068 points. Elon Musk stated that there has been progress in chip development. Tesla surged 7.6%. Meta and chip maker Broadcom announced that the two companies will extend their multi-generation partnership for custom artificial intelligence chips until 2029. The deal includes the originally promised computing power of over 1 gigawatt, which is enough to power 750,000 American households. The two stocks rose 1.4% and 4% respectively. Morgan Stanley released its earnings results and its share price hit the 52-week high, rising more than 4%. The company's net profit for the first quarter of this year grew 29% year-on-year to $5.57 billion US dollars, with earnings per share of $3.43, beating market expectations of $3. Revenue increased 16% to $20.58 billion, also exceeding expectations of $19.72 billion. Within this, stock trading revenue surged 25% to a record $5.15 billion. Fixed income revenue rose 29% to $3.36 billion, and wealth management revenue increased 16% to a record $8.52 billion. Bank of America beat expectations with its results and its share price rose nearly 2%. First quarter net profit rose 17% year-on-year to $8.6 billion US dollars, with earnings per share of $1.11, surpassing expectations of $1.01. This marked Bank of America's highest earnings per share in nearly 20 years. Revenue grew 7.2% year-on-year to $30.43 billion, above expectations of $29.93 billion. Stock trading revenue increased 30% to $2.83 billion, beating expectations. Investment banking revenue rose 21% to $1.8 billion, also above expectations. Net interest income grew 9% to $15.9 billion, exceeding forecasts as well. However, like its competitor Goldman Sachs, Bank of America's fixed income revenue came in at $3.5 billion, below expectations. U.S. import prices in March rose 0.8% month-on-month, falling short of the market's expected 2% increase. In February, import prices had risen 0.9%, among them fuel and lubricant prices jumped 2.9%, the largest increase since January 2025, mainly driven by rising oil costs, which offset the decline in natural gas prices. Non-fuel import prices rose 0.6% in March. U.S. export prices increased 1.6% in March, below the upwardly revised 1.9% in February, but slightly above the expected 1.5%. On a year-on-year basis, U.S. import prices rose 2.1% in March, the strongest annual increase since December 2024. Export prices rose 5.6%, the largest increase since November 2022. The Federal Reserve's latest Beige Book stated that due to uncertainty brought by the war with Iran, U.S. businesses have postponed major decisions, leading to a deterioration in the national economic situation. Nationwide consumer spending saw a slight overall increase driven by high-income Americans. Many regions reported signs of consumer financial stress, increased price sensitivity, and rising demand for food banks and other social services. Our stock pick today is Jacobio Pharmaceuticals, stock code 1167. Jacobio Pharma is an innovation-driven clinical stage biopharmaceutical company committed to developing breakthrough cancer therapies for global patients. Its R&D strategy focuses on key oncology signaling pathways such as KRAS, STING, P53, and MYC. The company's research pipeline centers on tumor-targeted therapies and tumor immunotherapy, with core projects aiming to be among the global top 3 in their respective categories. The group's laboratories are located in Beijing, Shanghai, and Boston. It possesses proprietary platforms including the induced allosteric drug discovery platform and TADC-IADC platforms that use targeted drugs and immune recruiters as payloads. Leveraging these self-established platforms, the group has built a differentiated and globally competitive product pipeline consisting of 7 clinical stage assets, 3 assets in the IND approval stage, and several other assets awaiting IND initiation. These candidate drugs target previously undruggable targets with particular emphasis on RAS signaling. They offer broad applicability across multiple tumor types and show strong potential for use in combination therapies. Among all clinical stage candidates, the group's leading asset, IRAKI, has been approved by the National Medical Products Administration and was launched in May 2025. It was subsequently included in the National Reimbursement Drug List in December 2025. On August 30, 2024, the group entered into an out-licensing agreement with Orlist Pharmaceuticals, granting Orlist rights to develop IRAKI and sidneprotafib in Greater China, while Jacobio retains development rights outside of China. The company is currently seeking advice on the registration pathway with the US FDA. Orlist has been actively advancing sales and market expansion for IRAKI and achieved solid sales performance in the second half of 2025. The group's non-wholly owned subsidiary, Beijing Jacobio, entered into a licensing and collaboration agreement with AstraZeneca to jointly develop and commercialize the pan-KRAS inhibitor, JAB23E73. Under this agreement, AstraZeneca is granted an exclusive license for the research, development, registration, manufacturing, and commercialization of JAB23E73 worldwide, excluding mainland China, Hong Kong SAR, Macau SAR, and Taiwan. AstraZeneca will bear all subsequent development and commercialization costs and activities. In March this year, the group received an upfront payment of $100 million from AstraZeneca. The receipt of this payment has further strengthened the group's cash reserves and will provide strong support for the continued advancement of its innovative oncology pipeline. Recommendation: buy at $7.80, target price $8.80, stop loss $7.40. I do not hold the above stock.